Well, one of the biggest sources of inflation in the past 2 years has been the rising price of new and used cars. As if the price hikes weren't bad enough, the waiting times for a new car was even more frustrating. But in yet another sign of falling inflation, the wait times, well, they're coming down, as well as the prices, as Ingrid Willinge discovered.
Australia's accelerating inflation, which prompted the Reserve Bank to hit the brakes with 9 consecutive rate rises, was in part driven by the higher prices for cars. But finally, there's a little relief coming for car prices and waiting times.
What we're seeing in the used car market is definitely a slowdown in activity. In the last 4 to 6 months, we've also seen used car values decline. Only slightly decline in the last 4 to 6 months, but what we're also seeing at the prestige and luxury end of the market, we're seeing some larger falls, some in excess of 10% in value, and this has occurred in the last 4 to 6 months. And what we're also experiencing is that we're seeing used car buyers scale back their budgets. With rising interest rates, affordability has become an issue, not only in the used car market, but also in the new car market.
I'm here at Pickles Auctions, where they sell around 60,000 of these used cars every year. In fact, there's an auction going on next door as we speak. It's here where you'll start to see the very first signs of deflation in the economy as prices start to come off slightly, and prices have come off around 12% in the past 6 months.
Yeah, I think the prestige space is some conservative bidding often in that space, and then that will flow through to the more fleet type assets. So yeah, we have seen a few challenging prestige sales of late. But I think it's just consumers taking a more conservative approach given the economic climate that they can see that's coming ahead.
With credit markets starting to tighten, affordability is a central focus. And auction house Pickles is in dialogue with government, banks, customers and suppliers to see what sort of effect higher interest rates will have on the demand for cars.
We are starting to hear from some of the banks that there are arrears that are starting to grow, and they haven't seen that for some time. There's obviously been a lot of hardship extended to many customers over that period of time. We do expect over 2023 that there will be more repossessions and potentially some more insolvency matters that will flow through as a result of the pressures and the declining economic climate. That could mean more vehicles are repossessed, unfortunately, and come back to be sold, and more choice for the customers at the end of the day.
It also means some people won't take possession of the car they thought they would just a year ago. And this will also contribute to supply and could push prices down further.
The other thing that we're seeing with new cars being picked up at the moment and that were ordered about 12 months ago, when buyers are going through their finance application again, they're not being approved for finance because from the point they ordered the vehicle 12 months ago to now, their financial situations have changed, their mortgage repayments have increased significantly, and they're not qualifying for finance.
Imagine that. Some people who ordered cars 2 years ago might walk away from their deal because the price of cars has risen too much in the meantime, sort of like off-the-plan apartments when prices crash. But a sign that many Australians will still have plenty of savings and a capacity to borrow, something the Reserve Bank this week said it's watching closely. There's still robust demand to replace stressed buyers, even with cars at these higher prices.
What we're seeing at the moment is not so much an issue with buying intent, and the way we sort of measure that is we're looking at traffic to the car sales website. We're looking at lead inquiries of consumers on cars that are being sold. We're also looking at things like how long it's taking for a consumer to sell a vehicle online, and those metrics are all good.
Some of the pricing resilience is because wait times for cars has been so long. It's only now, as car plants overseas ramp up to full capacity and the shortage of computer chips is starting to ease, that the supply of cars is picking up, which would normalise the supply and demand as the months roll on.
New car demand should still be strong at least until mid-year, and that's as a result of back orders still being fulfilled. But new car inquiry has definitely dropped off in the last month or so, and that's largely due to the recent interest rate rises that we're seeing in the market.
But there is a question about the future of used car prices, which boomed during the pandemic when new cars were in short supply. There is a time when the majority of buyers will revert back to the new car market.
Yeah, no, private sellers are going very, very well. And there's several reasons for that. So part of it will be, as more new cars are sold, consumers are selling out of their old cars, and so they're looking to sell those, many of them looking to sell them privately. You're looking at price, and we just talked about price before, and used car pricing is up quite considerably. So you'll have private sellers that are looking to test the market and to try and get those sort of prices that are out there now.
One of the most interesting parts of the car market is for electric vehicles. In January, the Tesla 3 became the best-selling passenger vehicle in Australia and the third best-selling vehicle overall behind the Ford Ranger and the Toyota Hilux. And its sales efforts have been aided by price cuts of up to 20% for its most popular models.
We look at electric vehicles like any electronic product. As the technology improves and supply improves, prices do come down. So think of mobile phones when they first came out. They were expensive, they were bulky, they were inefficient. But today a mobile phone has a lot more storage capacity, a lot more functionality, and is cheaper to own. So we see the same thing happening with electric vehicles over the next 3 to 5 years.
So where to for the next year? Well, prices are certainly falling, but according to Brendan Green, there may be a floor.
They'll decline over the coming years, but they won't fall off a cliff. It'll be gradual, but we will see a return to normality over the next couple of years. And that will be in line with supply chain sorting itself out, manufacturers being able to deliver everything, the government's being able to fulfil their order books, and the fleet companies too.